Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning, everybody. Hold on. We don't have the lights here. Somebody messed up the camera. Oh my gosh. What the heck, Melissa? Well, that'll have to do for now. I think... Excuse me. You didn't hear that. Oh, wait, we're... and also we need Spotify. Wait, why are you installing? Okay, well, anyways, market is moving here. The treasury's up pretty big. There was no scheduled news releases. And it looks to me, from scanning Twitter, that the market believes that Hazard just gave away what the non-farms on Wednesday is going to be. What did he say? White House NEC Hazard should expect slightly lower job numbers. Lower numbers shouldn't trigger panic. So the market seems to think that he just gave away. Interesting. Well, this provides an interesting potential opportunity for us, doesn't it? Let's come in and look at some of the other things that we've got going on and add everything up, shall we? Do you trade prop firms? No. Okay, so in the treasuries, you can see there was a little bit of downside movement in the overnight. And one of the things that happened was that China said to its banks, not like the national bank, but, you know, it's small regional banks, to limit their exposure to treasuries. So it seems to me like China is trying to trigger some sort of a sell America. Perhaps they think that it benefits them strategically or maybe for negotiations purposes. But we moved down a little bit on that. But now this jobs number, and again, the reason that we went up so hard on the 5th was largely because of the job openings number. So we are getting some signs that the labor market is getting worse. And it could well be like the lead into a recession. Although not, you know, there's definitely a scenario where we could say, the labor market is still a little bit weak. We do need to lower interest rates a few more times, but it doesn't result in a full-on recession. Okay? That's kind of the scenario that the market is starting to look at here. You got the S&P 500. They took a big hit last week, but they did recover fairly well on Friday. Tech is massively, I don't want to say that it's like oversold relative to value because, you know, that's making an assertion. I think that it is, but that's making an assertion that I don't think that I can really authoritatively make. So there was some buying on Friday. We'll see what they do today, if this week ends up being another sell or if we get a recovery week. Oil, kind of going back and forth. I am concerned about oil moving higher because there is a lot of buildup in Iran, and the negotiations that they were supposed to have on Friday basically went terribly, didn't really actually happen. So there's possibility of this going higher. If not, then probably the oil supply glut narrative takes back over and we go back below 60. Also, the economy struggling would also be something that could push oil down. Gold and silver, on the other hand, well, it's not a ton, but gold is up. So make of it what you will. Silver taking another hit on Friday and recovering this morning. Copper, copper is kind of following gold and silver with some of these ups and downs, which is kind of curious. And then the yen, well, the yen opened incrementally higher due to the election. The election in Japan being overwhelmingly positive for the I don't know what to call her. The right-wing government is, I guess, what we could call it. Right-leaning government. They want to revitalize the Japanese economy. This has pushed things up. This is pushing the dollar down. Then on top of that, you had the whole China thing. So that's also pushing down the dollar. And Bitcoin, well, on Friday, Bitcoin got pretty scary. In fact, Donald Trump's SPAC thing, whatever. No, it wasn't a SPAC. I don't remember what it was, but they had a company. They sold some Bitcoin, and we are below Michael Saylor's average price. Is there who's going to be the next to sell? Though is kind of the thing. This is usually where it stops. So I don't know. I guess I don't really want to get involved in Bitcoin. There is a possible accumulation going on over here. Okay? So if we have weaker dollar, China selling, and then jobs numbers bad, what does that mean for our short-term flows? Probably, I think that we move up and then some selling. Yeah. Strangely enough, we are relatively close to where the overnight was. So, when's that non-farms actually coming? Wednesday. The actual release is Wednesday. CPI is Friday. So we've got a pretty packed week. Actually, that's a good question, because it reminds me that we need to check the schedule for this week. We do have some Fed speakers today, but not until much later after we're gone. And this week, Tuesday, we get retail sales. That's pretty big too, right? So we get retail sales, non-farms, and then the usual on Thursday, unemployment claims, existing home sales, CPI. And then on top of all of that, we're also getting bond auctions with a bond 10-year on Wednesday and a 30-year on Thursday. And I bet you that there's probably some shorter-term ones, right? Because today we've got 3- and 6-month bills. And I'm sure that there's something on Tuesday. So we're getting treasury supply. It could not be a more packed week. But the caveat, treasury volatility is still very, very low. Unusually low. Now, I saw a note from analysts. I forget who it was one of the big bank analysts, suggesting that volatility in the non-farms payrolls themselves is increasing, and so that should lead to increased volatility in the treasuries. Interesting. Okay, let's fix the camera here. My wife used the computer the other day, and I don't know why she would move the camera, but I think she moved the camera. That looks better. Well, let's recenter here. 2 or 3 ticks down. Not below 4.22 though, interestingly enough. Oh, need to turn off the speakers too. She urges technology breakthrough, huh? Few more ticks down. So this is kind of the scenario that I was painting, right? Move up. It retraces. I've got to line it evens though, so I kind of want to see what it does there. Huh? Goldman Trader says hedges make sense here. Who's that? Is it Tony? Oh. Lee Coppersmith. I don't know who that is. When AI runs hot in Asia, Bitcoin loses its bid. You used to work at Goldman, still work there? No, I wouldn't be able to do this if I worked there. There's actually been a few times where I was looking at job postings and I'm like, well, that seems to fit me almost perfectly. But then I didn't want to work for a financial company, so I didn't do it. There was one that was a local bank that I got really far into the interview process, and they told me it was between me and somebody else. And they didn't pick me, but I was getting some vibes from one of the people that I really didn't like, so I didn't want to do it anyways. Oh, the same people I used to work with still work at Goldman? Some of them. The people that I used to work with are more like on the tech side though, mostly, right? And are like maybe managers now. But I generally knew people like Tony Pasquariello. I don't think I'm saying it properly, but he's basically like the head of the desk that does for all of the hedge funds and stuff. Does execution for all the hedge funds. So he's like he's probably the best one. I always found his weekly newsletters extremely enlightening. But I never met him. I saw him once, but I never met him. I met Jan multiple times because Jan used to be, they have a research, section in Salt Lake City. So sometimes I would see him down in the foyer, and I knew that that's what he did. So I'd always ask him what's going on. And then later they made him head of all of GER. And man, every time that you talk to that guy, it's like, okay, so what do you see Where do you see the S&P 500 going? And he would talk about so many different factors that help them predict where the index is going to go that like you would have never heard of before in so much detail, just without any preparation whatsoever. It was crazy. Guy was so smart. When he says stuff, I always take a look. Now you got to be careful when you're talking about the really, really big guys, like when Jan speaks, because like usually when you're hearing Jan, it's because he's like on CNBC and they kind of turn everything into like politics now, right? So you got to be careful about it because of that. But yeah, they were right all the time. So one that I would point to that many people might not realize and at first might say, no, that's not what happened, but that is what happened, is that Goldman basically said when we got the tariffs that the tariffs were not that big of a deal. That the amount, like they calculated the amount that inflation could potentially go up because of tariffs and that it would be a one-time thing. And ergo, not a huge issue, at least for like inflation. And they were like right on the dot. Like the amount that we saw and the places that we saw it and everything was pretty in line with what they said. And the larger play that it's not going to lead to hyperinflation is just kind of be a blip was completely right. And meanwhile, at the time, everybody in the media was like hair on fire where this is going to be hyperinflation, yada, yada, yada. They were totally correct on that one. I need to go roll my back or something. Got a little kink in my neck. I think in general that analysts get a bad rap because one, a lot of the decisions that they're making or a lot of the recommendations that they're making are because like you have to make a recommendation. You know what I mean? Like I think Jim Cramer is the best example of this. People are like, oh, Jim said it, now he's wrong. And there has been this kind of funny thing that when he says something about it, that's when it changes on like big macro things. Sure. But a lot of people do this analysis like if we take every stock that he mentions and whether it's good or bad and look at it afterwards, it doesn't beat the market. Well, of course not if it's like every little thing that he ever makes a comment about on TV. Because he's not managing a portfolio. And when he's managing a portfolio, I think that it mostly just is in line with the S&P 500. Partly because everybody is watching it, right? So, but that doesn't mean that they're not sharing good information, right? Everybody thinks, oh, okay, here's this analyst, they know what they're talking about. I'm just going to do what they say to do. And if you do that, it doesn't matter who they are, how great they are. It's not going to work. It doesn't matter if it's me or anybody else. Because there's somebody out in public that are being widely followed that, you know, everybody follows that. Yeah, it's going to move it, but then it's creating its own aberration. So it's actually like negative edge following other people. Following other people is negative edge. But you can still take the principles that they're sharing and do that analysis on your own and other things. Find your own edge, find your own opportunities. And that's a great way to start out. Another issue is that these guys are mostly trying to look at value, right? They're trying to sort out what is the economy going to do? What is the value of this company? And that's not what actually drives asset prices. What actually drives asset prices is just people buying and selling. So there's all of this other information like the rebalancing and the options and and all of these other regular flows that have a very significant impact on asset prices, on not just like on an intraday basis, but on a weekly, monthly, yearly basis. It's not until you get out to like 5 years that this kind of like larger value kind of play sort of a thing actually works. Right? So those analysts are always going to be limited by what their job is. Except for the flow analysts. The flow analysts, the ones that are set to say, okay, here's how much come in from CTAs, here's how much comes in from momentum funds, here's how much comes in from index funds, you know, predicting that. Those are great. Now, they're not giving you the fundamental picture, but on our time frame, like, that stuff probably matters more. Now, if your job was to just straight up predict what the S&P 500 is going to do over the next month, then you would combine those two things. But then why aren't you trading it, keeping it to yourself, right? That's the thing. So there are people out there that do that kind of analysis and are very, very good at it. And they're not going to be on TV. They're not going to share with you what their trade is, right? The discretionary macro hedge funds of the world, like George Soros, and I can't think of other names, but you get what I mean. Yes. Okay, so I got a couple of things to do today. I need to package together some pictures and send it to this guy that wanted to make thumbnails for us. So let's do that. Yes, we got to do that. Okay, hold on 1 second. So first, let's where did I put it? Oh, there's some. Oh, yeah, I have it. Ah. Okay. Where? Oh, there it is. Hot in here today. It may partially just be me, but I am hot. Oh, you know why? Because I don't have the fan in front of the door. Okay. All right. All right. Got that. So we need to give the pictures to the guy that wanted to do the thumbnails to check if the VPS was still going. I think it ends sometime in this month, though. Actually, did I close that window? Yeah, we're good. Okay. So I'm tempted to try and make some updates to our volatility indicator because there is a bug that we know is in there. But I think we should stay focused on it over here. Does look like that 04 area is the overnight projected range is holding them back. And my back is gonna feel all weird. So yesterday I was doing a bunch of exercises to try and address like rib flare and things like that because I feel like, well, part of it is probably I think I've gained some visceral fat. So need to do some sprints. I think I can do some sprints today because if I don't do them today, next week it's supposed to snow. So I can go outside and do that. But you know, I was doing like bird dogs and things like that. And I think it is like shifting my rib cage because I feel all out of sorts today. Do you trade real money? I never asked. Sometimes. You know, I've only taken like one live trade this year, I think. And I was thinking that maybe we were going to get an opportunity this morning to do a good one. But at the moment, I'm just not feeling it. The moment, it kind of, well, I mean, we got 3 ticks up. That's not bad. But I don't know. The setup on this one is a little wonky too, because when you get this thing that's like, did somebody just leak that the numbers are going to be bad? So one, there's the uncertainty about whether it really truly actually was a leak or not. 2, you've got people wanting to just take profits, right? Like anybody that did buy on that news, okay, it's over, I made my money. Or if I happen to be long and just got lucky, probably I'm thinking, well, that was way more. I wasn't expecting that. That's way more than I thought I was going to get. So I'm going to take my profits, right? So there's some of those things that make it a little bit hard to take a trade off of that. I thought that maybe we would get some more volatility. Well, actually, we may yet. We may yet. And some of it may come in more when we get the S&P 500. And then a final factor that you have to consider is that there's probably some that were betting on a non-farms payroll number being bad, even perhaps negative, just based off of the data that we got last week. So, yeah. But when I have been taking trades lately, it's only been in the micros. It's only been in the micro yield curve, micro treasury yield curve. So I'm only risking like, $10 at a time. Now, when I have been trading SIM up here with multiple contracts on ZN, and nothing too crazy, like maybe 2 to 5 contracts, I've been doing exceptionally well with that since we kind of dedicated ourselves to trying to learn how to manage multiple contracts. And I don't know if I've really found anything that really helps me manage multiple contracts, but I have done well with those calls. But I'm taking on a lot of risk to do it. So I think that to trade that way, I would need to have a really, really big account. I don't know. It's kind of curious. Now, on the stocks side, my stocks continue to do really, really well. So, in some respects, I think of my futures trading as more of a loss leader. That helps me understand what's going on so that I can make money on my stocks. Even though we are doing okay with the, when you take the live trades we're doing okay. I'm not taking a ton of them, but then the sim trades have been really, really well. So it's not like the futures trading is like negative, but I don't think that I would be making like the amount that I'd be making wouldn't really make it all that worthwhile. How much risk? Oh, I think that at most we're risking like 1,000 is like the biggest loss that I'm taking when I'm doing that. Yeah, the prop firms don't have the treasuries anymore. Is another part of it, isn't it? You know what, though, more broadly, every time that I see somebody that they think that they've really got it, they think that they have an edge, let's say. Well, no, let me put it a different way. Every time I come across somebody that I think they actually know what they're doing and they're getting payouts from a prop firm, the prop firm cuts them off Yeah, prop firms used to have it until like a year ago. And then I think that there was somebody did enough getting payouts just from scalping one tickers that they got rid of it. I don't know. Like, the whole thing is just kind of funny because any kind of strategy that, you know, really seems to work, they're like, no, that actually breaks our rules. We don't want to make a new rule to prevent you from doing it. You got to understand, you getting a payout from the prop firm is money out of their pockets. They don't want you to be successful. And when there's that big of a conflict of interest, I really don't think that it makes sense for you to even bother. Because even if you beat the system, they find a way to screw you over anyways. It's just like when you go to the casinos, if you get a huge payout at the casinos, they're like, oh, okay, except for that you can't leave yet. You have to, you know, stay in our hotel room and yada, you know, like they do everything to make you try and gamble it all away. Oh, funding ticks stole like 5,000 from me. They went under. Wow. Yeah, like it's becoming more and more common. If you go on Reddit, and I by the way, I'll tell you what, I don't know what the deal is, but the people that post on the subreddits, the trading subreddits, are like a special brand of stupid for some reason. There's just a lot of people that have really dumb ideas about trading in markets for whatever. And things like, you know, I didn't get paid every day. Every day. Top Step had an ad in the Super Bowl? Really? I'm surprised. You know, I'm actually, if we come to Reddit here, because I didn't see anything about it. I take it that the Super Bowl halftime performance must have just been pretty mid, because there's not really anybody. Now, I'm sure that the NFL told them not to do anything crazy, like wear a dress or any of that. They don't have that kind of money, Top Step, to do. I don't know, man. It makes a lot of money. And surely they're the largest ones. I mean, like, think of it. Like, they had Top Step for years. 4 years. And then Apex came along. And then the pandemic happened. And there was this explosion of day traders. And then they all kind of figured out that the easiest, most practical way for a regular person to get into it was trading futures on these prop firms. And then it just exploded. You know? Don't you think futures experience can help you with short-term options scalps? Yeah, it could. Although when you're talking about options, there's some other things that you have to factor in. Okay. So one of the things is that options are extremely illiquid. They are extremely illiquid. Like my micro 10-year down here, that's a fairly illiquid instrument. What you're going to see is probably more like that, right? Like there's going to be a big spread. There's not going to be that many contracts. And like when it moves, it'll just move and prices will lift and there won't be any trades at some of these prices. They'll just skip around, right? And then if you do take a position and like let's say that you do catch a winner, right? And it goes up and then you're like, okay, I'm going to sit on the offer and try and get filled. You might not get filled. You might not get filled because like once the volume rush is over, it's hard to get a price that's like These guys are very, very efficient, and so like they've got their price selected and they're gonna get filled before you. So then you have to give up the spread to get out. And that ends up making a significant difference. If you have to cross the spread, both sides to get it, you know, that in some cases that could be all of your profit, you know. So the thing moves up and you don't make money. That sort of a thing. So there's because of the liquidity in options, you get some additional issues to consider. And generally speaking, I do not see a lot of people talking about scalping options and making money from it. It's just not common. On the retail side, you're trading options. It's much more common and practical, frankly, to YOLO. Make a big play on earnings, and then you're right, you make a ton. That sort of a thing. Oh, there's a good uptick. So let's see how they deal with the 04 again, huh? Yeah, still thinking Madi talking about Top Step doesn't have that kind of money. Yeah. Like, the fact that, like, there's now probably 24 different funded trader firms out there like that now says that there's serious money in it. And it won't be tomorrow. It won't be next month or next year. It might not be until I'm an old man, but I'm going to bet you at some point it will get regulated. And we'll see if it's an outright ban or just regulation. Because this is exactly the way that bucket shops went. It's exactly the way that bucket shops went. And eventually Congress said, this is predatory, and put a stop to it. Are they a scam? Well, so I think that a scam is probably too strong of a word. Because that suggests that they are like that you don't actually get the service that you pay for. But they are providing a service and you do get what you pay for. The problem is just that it's, you know, way harder than you think. It's more like, do you think that carnival games are a scam? Right? Like they tell you, you come in here and you can push this bowling ball over this hump or whatever, and you can get a stuffed animal, right? And like it's all legal and they're all telling you, right? But what you don't know is that it's like practically impossible for you to beat that game, right? And the amount of times that you'd have to play the game to get the stuffed animal, you could probably just buy the stuffed animal outright, right? So it's not a scam, but I do kind of feel like at this point that it is for suckers. And the thing that bothers me about it, bigger picture, is if you really want to trade, and by the way, you really have to think about why do you want to trade? Because I'm just telling you, the amount of profits available for day trading is not that amazing. Okay, if you want to become a rich millionaire, blah blah blah, whatever, like, but really you have to do a startup. Okay. Trading can be a great wealth enhancer, but it's not a great wealth builder. And to pass these prop firms, you have to do strategies that have a lot of intraday volatility, because you're talking about practically doubling your account in a month, right? So that pushes people towards strategies that aren't practical in the long term, that aren't going to be profitable long term. That's like the whole point of it, is they go in and you give them these targets that are so high that anybody that does pass is just kind of in, you know, a matter of time that they are going to blow up. Right? So if you really do want to trade and you really want to get good at it, then doing these prop firm challenges are making you worse. Like the targets and the strategies that are allowed and all of that are pushing you towards stuff that is not going to bring you long-term success. They're actually making you worse at trading. My first job was at an arcade and I only got one winner. Jeez, that's terrible. Yeah, they do pay out, but it's more like a gambling operation rather than an actual trading firm. That's what I thought. Well, they make their money like really think about it. What it really is it's a $150 a month subscription service that some people will buy like 10 subscriptions at a time. Yeah. Can you imagine if we take like so whenever I'm thinking about subscriptions, I always think Netflix, because Netflix has the most subscribers of anything. Can you imagine? Netflix, they make what, $20-$30? I don't even know how. I have a Netflix subscription and I don't even know how much I'm paying for it. but can you imagine if their subscription was $150, how much money they would make? Okay. And these prop firms are serving thousands of clients. Thousands. So you're talking about something that brings in millions of dollars a month in revenue. Okay, they are trading 04 half. Trade micros and learn to trade with them instead of prop firms. Yeah. Like, honestly, if you come in and trade these micro treasury yield curves, and especially if you're doing like spread trades and stuff, you learn so much more. And you can like swing trade them. This is the other thing, is that if you really want to, like, if you're not into day trading itself, and to be honest with you, I kind of feel like that most people aren't into day trading. They want to trade, but they just think that day trading is the way to do it. But there's not anything about day trading that is like, that's what speaks to them, right? You're better off swing trading. Okay, like all of the traders in your books and your Jack Swagger books and all that sort of stuff that you've read about that hit big, they were swing traders. They were all swing traders. I'm up compared to how much I've spent over the years on evals. Yeah, you know, I would bet you that most of the retail traders that like really do it for years and years and years probably make more on the evaluations than what they put into it. But it's really not much to speak of. Of course, there is a few people that they're going to make like $100,000 and whatnot, but otherwise. And those are the ones that just got really lucky. Did I download this file? I did. Oh, it's only 7:30. Well, we only get 90 minutes, man. I forget, can I drag and drop a file onto a VPS? Nope. Nope. I have to copy the link. Open the browser over here. Nope, that's not it. There we go. Buying 5 accounts was probably the game over. You don't overtrade on one account. Oh, really? That's another one that really weirds me out, is that people buy multiple ones. Like, the math works out. I get why they're doing it, but really you're just making them more money. Yeah, I'm pretty anti-prop firm. I don't know what more I could say. I made a video that was, you know, prop firms are for suckers, where I really get into it. I mean, the irony of the situation, the real, I hope that you guys appreciate. Sometimes the whole thing, the life of a middle-aged, 40-year-old man is not feeling appreciated enough. Because if all I did was sit here and trade ES and hawk funded trader evaluation affiliate links all day, I'd probably be a millionaire by now. I was the first one on YouTube on that sort of a thing. If I make a video about funded trader accounts, the algorithm pushes it out because I'm authoritative on it. And if I had really pushed that the way that some people have, where they know that they're just making money on the affiliate links and they're just pushing that as hard as they could, right? If I'd gone that way, the algorithm would have prioritized me. It would have. But when the founder of Apex was found to be running an outright scam, not Apex itself, but another exchange was an outright scam, and I already didn't like what they were doing. That was when I said no more prop firms. And that was a long time. That was like 6 years ago. Wow, we got what, 3 minutes to the open? Past week's sell-off exposed how much of the market's recent support was transient. By the way, when is the expiration? Next week. Maybe I should have just worked on the indicator because it has been kind of quiet. I mean, we got the move back up, but what I'm seeing still looks like oscillations that I'm not sure that I could really make a very good call on. If I make 20,000 before I lose 20,000, I'll let you know. Cool. Steph sent us a new version of his DOM, so we can take a look at that tomorrow. Let's see here. The first 2 years, I think I lost so much with evals. Top Step used to have 2 combine challenges before. Oh, yeah. So I have definitely, like I think back when I was doing the prop firms, there had been like streaks where I would have passed and they just never lined up quite nicely enough with the combine. I think it would be better now, except for that the treasuries has just not been a very great trading instrument lately. Like it's funny, I'm ready to trade, and then volatility is just crazy. Because my observation has been that if treasury volatility is like below 5%, that it's hard to trade it. So yeah. But certainly since that old time, I've had many times pretty regularly that I would have passed an evaluation. But to have passed it twice to start getting the payouts, I don't know. Usually what'll happen is I'll have a good streak for about a year, and then there will be one time of the year that, like really matters. Not if I screw it up, I screw it up. but I also think more broadly that like the things that seem to work for me are all things that don't that pass that like break their rules. You know, like swing trades and oh well, people absolutely get payouts. Yeah, people absolutely get payouts. In fact, these stories that are like 100,000 in payouts over a year, it absolutely happens. Absolutely happens. Like if you think about it, if they've got like 10,000 people that use their service over the course of a year, at least one of them is going to get lucky enough that they make a huge payout. Which is why it's kind of extra suspicious for some of the more shady ones that like, I saw this one where the guy, they did it and they got the payout once and then they had a big windfall after that. And so they were going to make another 5,000 and then they killed it without any reason given, even though they paid out the one previously. Those are the extra, like if I see a story, I don't think I've ever seen a story like that about Top Step. But if you see that, a story like that about a prop firm, that's definitely like, don't use them. Because that says to me that they have not built up a whole lot of liquidity yet. Okay, that was interesting. This little slip there. Possibly because the E-mini is turning bullish a little bit. So how can they afford? Well, Top Step can. Top Step can. Like, I think when I said like 10,000 people, you know, like I bet you that Top Step probably gets 10,000 people a month. Right? And I'm too lazy to add my zeros up here. Where's my pen? We have, oh, why is it so tiny? So if we have 10K and then they're doing 150. So we add 2 more zeros. Times 1.5. That's $1.5 million a month. Wow. The numbers aren't actually that great. That's how much revenue you're bringing in, but probably the profit margin on it is probably less than 5. But like once you pay for all the employees and the data and all that sort of stuff. How's that a lot of money? Well, it's certainly enough to buy a Super Bowl ad, I think. Maybe I'm lowballing it. Maybe they get more than 10,000 subscriptions a month. Sure. Yeah, because the Super Bowl ad is like a maybe 10 million. I don't know. Let's ask the internet. How much does a Super Bowl ad cost? In 2026, the average was 8 million. $8 to 10 million. Yeah, they could. They're in the range where they could make 8 to 10 million. It's probably a stretch for them, but I bet you they're gonna make money from it. I bet you the number of people that come in is pay for it. Especially when you just look at brand awareness. It's really disheartening to see people get into the thing that you've been an expert at, but do it in a way that you're so that's so sad. You know? Cuz ultimately the thing that I think makes day trading valuable is what you learn along the way about the markets. There's some really valuable lessons for society at large that hidden in the order flow, basically. And everybody just goes and does a prop firm challenge with some stupid chart pattern, and they don't learn anything. They don't become more informed about the news in the financial markets. They don't become more informed about the empirically proven behaviors of markets. They just learn a bunch of junk. Frustrating. Well, the E-mini is definitely turned bullish and the treasuries are selling because of it. So that's interesting. Those lines make money. Sure. I mean, I think that there's some of those lines that probably make money most of the time, but it's not a net profit on a risk-adjusted basis. Not that I've ever seen a pattern. I tell you what, like having a pattern that even wins 55% of the time is really hard. It's, man. So I think I read somewhere that Renaissance Capital, that their win rate was like 57%. Wow. Which kind of comes back to this thing that's like a lot of the things that retail traders are trying to do. Day trading is just not practical. Day trading as a speculator, I think that makes sense. Day trading as a technical trader, and unless you're programming a robot, I don't think that makes sense. And even if you're programming a robot, you probably need to have a co-located server and a signal that gets traded a lot. At the end of the day, the market is really there for the people with the money and the people with the information. And it's designed for everything else to be noise to cover those two people. The one with the money and the one with the information. You just gotta know when to sell. Where is I'm not sure who Travis is. Am I going to feel really foolish when you tell me who that is? I'm like, oh, yeah. Yeah, that is Travis. My bot, Travis. Oh, yeah. Oh, you know, I was trading a robot and we kind of forgot about it. And I mean, that's always what happens is I'll open it up like every day and then the weekend will come in on the Monday and I'll forget about it. Yeah. I think part of it was I felt like I was getting close to where I could really do some like real machine learning on them. And then I really tried really hard to get the machine learning into NinjaTrader 8 and it just doesn't work. It just doesn't work. And then I started focusing more on my own platform. And then we started a new job, and I don't really have time for any of those things. In fact, I haven't found any time to even make a video, even though I have one that's like almost completely ready. I really should make that. I could have done it this weekend because the kids were home and everything. I didn't have to watch the boys. Could have done it. There is one small change that I want to make to it, and then I can do it. I have a bunch of notes about videos that I want to make too, so I just need to finish them. Look at oil go. Looks like a major oil analyst put a report out, and that might be moving oil. Most of my feed is, Venezuela's crude production close to 1 million barrels per day after output cut reversal. Crude output at Venezuelan main oil region, the Orinoco belt, has gained more than 100,000 barrels per day to some 500,000 after PDVSA's output cut reversal, says sources. Something's going on in UK Parliament that's pretty big. Mexico oil shipments to Cuba halted at this moment, says Scheinbaum. I'm curious to see if there's a point at which oil moves that the other markets take notice of it, because so far it seems completely separate. You were ahead of your time, yeah, maybe. In some respects, I'm ahead of my time, and in some respects, I'm already past. Right? Well, if we get our own trading platform and we get all the machine learning built into it, then we'd be ahead of our time. But people have been putting machine learning into robots like this for a really, really long time. So much so that it kind of makes me feel like that it's be hard to be successful without incorporating machine learning. It just reminds me there's this guy on TikTok that he claims that he's been outperforming the market for the past 2 years, which I'm kind of like, well, that's not that big of a deal. You could just be lucky in doing that. Like, what's the longer term historical performance? He's convinced that the only thing that matters is fundamentals, and so he's basically doing fundamental data plus machine learning, right? And he does not understand all of the other things that move markets. It's kind of funny. And I ask him questions that, like, you know, to try and get him to realize that he's taken on a dogmatic position that doesn't really make a whole lot of sense given the evidence, and it just goes over his head. I think I should give up. I think the last one. I feel like it was the last one. Like, I give up on him now. I thought he had the potential, but apparently he doesn't. Oh, well, Nassim Taleb is arguing with people about IQ again, aren't they? No, it's not IQ. We're talking about correlation. Well, why is Bitfinex reposting that? Adam Schiff says Secretary Howard Lutnick lied to the country about his ties to Epstein. I tell you what, man, isn't it wild that it's been more than a week now since the additional Epstein files have come out? And I'm still sitting here like, I'm not sure I understand why this stuff wasn't released to the public before. Like, I thought, oh, there's nothing in it and it will just harm the victims. But they redacted names out of it. And I don't think any victims have been harmed. But everybody's acting like, oh, it's come out and now we have the smoking gun and now we know that all of the people in power are pedophiles and yada, yada, yada. And I'm just sitting here like, what email says that? What email proves any of that? I mean, for sure, Epstein was involved in bad things. And some of his buddies were involved in bad things, but I don't see the proof that it was like a worldwide sex trafficking cult, yada, yada, yada. Nor do I see any evidence that could be used to prosecute somebody else. Which is the thing that I think really matters, right? If, like, it doesn't result in somebody being prosecuted, then what's the point? Is it that everybody is just yapping about it because it drives so much engagement? I don't know. There's definitely a lot of people that continued to associate with him even after he was in jail for it, though. By the way, I guess maybe I was wrong about this in the treasuries. Like, so they touched 04 half, but they were never really able to get it to go bid, and it's come back. I mean, 4 ticks these days isn't bad. So I do not understand what's going on in the UK Parliament right now. I think I missed the bigger, like, all of the politicians are coming out and making statements. It sounds to me like something like that could challenge the Labour government. TurboTax just sent me an email that says your refund just got bigger. Probably not. I would be surprised. No, yeah, I would be surprised if I didn't owe taxes this year. Hopefully it's not too much. Because I had a contract job, right, where they don't take the taxes out. So I had to save it all up myself. And hopefully I saved up enough. Why does Top Step have the same issues from 2020? So many glitches? Because it's inherent to the way that they built their system. Right? You could go and you could build a system and use KDB Plus and build a tick factory that runs and calculates everybody's positions and whether they've gone over their risk controls at 10 times a second. And then it would be perfect. And it would give everybody perfect real-time feedback about what's going on. But that would cost money. And it costs money to run it. And you need a machine with a ton of memory. So they're not going to do that. They're going to have a different, slower system that is kind of retroactive and leads to some of these weird glitches that you're talking about. Well, there was our sound. Still got 5 minutes, but I don't know. The spoos are definitely doing something interesting, aren't they? Since when do you have this sound? It's been there. We've had it for a while. But what happens is that there's a tick, a click at the same time almost always. And the way that it plays it, you can't have more than one going at a time. I don't know if there's a way around that. But so that's why you often don't hear it. We could look at that tomorrow too. And remind me. Because I'll probably forget it if it's a thing. I've been having a hard time remembering things lately. I have so much packed into my brain for work that everything else that's going on, I just completely space. Hmm. Hmm. I'm glad to see Bitcoiners get their butts handed to them. Well, it is down a little bit today, but not nearly enough. So the thing is, we're like, you know, we've kind of passed the edge, but then you pass the edge and it stops, and that's always what it does. Is there's some level, like Michael Saylor's average price, that everybody's all watching and concerned about, and it will go past that level and everybody freaks out, and then after that they buy it back up. That's what it happens in Bitcoin. It happens in regular markets too, but very much happens in cryptocurrency, and I'm not convinced it's over. I would like to see it over, because if Michael Saylor had to sell, I really think Bitcoin could go to zero, at least temporarily, right? Could happen. Could still happen, but so far, no. All right, guys, it's time for me to get going. I will see you tomorrow. I think maybe I could have tried to play the bounce off of 04, but it's okay. It wasn't that good of a bounce. But later this week may yet provide us better opportunities. We got retail sales tomorrow. We've got non-farms on Wednesday. We've got CPI on Friday. We've got plenty of opportunities here. So, yep, Michael Saylor's average position is basically 75K. So he's technically underwater. If you really consider how much he's paying on the debt, he's way more than underwater. But his average price is about 75K. All right, anyways, I'm yapping. I will see you guys tomorrow. Stay excellent, team.